classmate. Today, our group will be present the venture capital investment cycle and IPO performance analysis of Zantat Holding Berhad, a company listed on the S market of Bursa Malaysia. Zantat Holding Berhad is a Malaysian manufacturer specializing in industrial minerals and specialty chemical. The company was established in 1985 and has over 40 years of experience in producing calcium carbonate product, limestone derivative, and sustainable bioplastic compound. Its products serve various industries, including plastic, paint, coating, construction material, and packaging. In recent years, the company has expanded into environmentally friendly bioplastic products to meet the growing demand of sustainable solutions. From a business life cycle perspective, Zantat is currently in the growth stage. This is evidence from the recent IPO expansion initiative and investment in product innovation. As a listed company on the S market, Zantat provides an excellent case study for understanding venture capital investment, IPO harvesting strategy, and post-listing performance.
Venture capital investing cycle analysis. As venture capitalists, we first need to establish a venture capital fund before making any investment decision. Our proposed venture capital fund size is RM50 million. The fund would be sources from institutional investor, government agency, and high net worth individual. To minimize investment risk, we propose a staged capital call strategy. 40% of the capital would be invested initially, followed by additional funding based on the company achievement of performance milestones. Next, we conducted due diligence on Zantat Holdings. The company has a strong business foundation with decades of operational experience and established customer base. In addition, its expansion into bioplastic product offer future growth opportunities. However, our analysis also identifies several risks, including fluctuating raw material prices, economic uncertainty, increasing competition, and recent decline in profitability. Despite this challenge, we believe the company's long-term growth potential remains attractive. Therefore, we propose investing RM8 million in exchange for approximately 15% equity ownership. Strategy: IPO analysis. One of the most common venture capital exit strategies is an initial public offering or IPO. Zantat Holding was successfully listed on the S market of Bursa Malaysia in March 2024. Through the IPO, the company raises capital to support business expansion, operational growth, and strategic development initiative. The IPO serves as a harvesting strategy because it allows early investors and shareholders to realize the value of their investment through public market participation. Investor interest during the IPO reflected confidence in the company businesses model and future prospect. After listing, we evaluate the company market performance by examining its share price trend, market capitalization, and investor returns. Although the company successfully completed its IPO, the post-listing share performance has faced some challenge due to weaker financial result and market condition. Nevertheless, the IPO remains an important milestone that enhances the company access to capital and increases its public visibility.
Good day. Today I will present the financial distress and turnaround strategy for Zantat Holding Berhad from 2023 to 2025. To give you a quick summary, Zantat is facing a unique situation. On one hand, its balance sheet is quite strong and safe. The company has successfully reduced its total debt and it has a safe debt to equity ratio of 0.42. This means 70% of its assets are backed by equity rather than borrow money. Its short-term current ratio is also healthy at 1.93. However, the real problem is with its operational income. Between 2023 and 25, Zantat revenue dropped from around 102 million ringgit to 92.2 million ringgit. At the same time, operating costs went up and the company had to write off 2.3 million ringgit in equipment. Because of this, the profit margin collapsed and the net profit margin dropped to a negative 5.92%. This net loss means Zantat is now in a risky position when it comes to paying off its debt. Its interest coverage ratio crashed to a negative 15.42, meaning its current earning cannot cover its interest payment at all. On top of that, a lot of vital cash is currently trapped in unsold inventory. Since the main problem is high cost and falling profit and not high debt, we propose a cost restructuring strategy to save the company. Zantat will do this through 3 steps. First, fix the supply chain. Zantat will audit the warehouse and run break promotion to clear out old stock. Moving forward, they will only manufacture product based on the actual customer order, so they do not waste cash. Second, cut daily overhead costs. They will combine repetitive office work and improve the factory layout to eliminate waste. This will lower their daily break-even point and help fix the profit margin. Third, freeze big spending. They will stop all unnecessary factory expansion and focus the money strictly on essential equipment maintenance. By stopping expansion and aggressively cutting down daily waste, Zantat can quickly save its cash, bring profit margin back to normal, and recover from this income crisis.
In conclusion, Zantat Holding Berhad demonstrate both strengths and challenges as a publicity list growth company. Its strengths include a long operating history, established market presence, diversified product portfolio, and opportunities in sustainable bioplastic product. However, the company also faced challenges such as declining revenue trend, profitability pressure, and uncertainties in market demand. Based on our venture capital analysis, IPO performance evaluation, and financial assessment, our group recommend a hold position for investor. This recommendation is based on the company long-term growth potential while recognizing the needs for improvement in financial performance. Looking ahead, we believe the company has opportunities to benefit from growing demand for sustainable material, regional market expansion, and product innovation. However, management must successfully manage costs, improve profitability, and strengthen operational performance to achieve sustainable growth. Thank you for your attention.